China still struggling despite recent efforts from the government to boost consumer spending. New data, including new bank loans in July, hitting a 15-year low. That has critics calling for more economic stimulus in the world's second largest economy. Here with more, we've got Yahoo Finance's Akiko Fujita. Akiko.
Hi there, Maddie. Yeah, so much of this data is being watched closely because what you mentioned, it is the world's second largest economy. What happens in China trickles out to so much of the global economy. And the latest tranche of data that we got this morning pointing to continued struggles for China. Let's take a look at some of those numbers. Fixed asset investment slowing, posting growth of 3.6% year on year. But it was the slowdown in the property sector that was especially pronounced. And as you know, this has been the continued pain point for the Chinese economy. Property investment fell 10.2%, with the decline in home prices accelerating. That was down more than 5% in major cities compared to the same period a year ago. And the new home sales, that number right there, down nearly 26% in July year on year. You take a look at industrial output, that expanded 5% in July, but that was still slower than the previous month. And then unemployment in major cities ticked higher to 5.2%. The one rare bright spot here coming through from consumers, retail sales were up 2.7% in July year on year. That did come in higher than expected. All combined, the data points to continued challenges for the Chinese economy in a year where Chinese officials have cited 5% growth as the key goal, and there are increasing concerns that goal is not likely to be reached, at least on paper. Now, the PBOC and Chinese officials have pushed to stimulate the economy, although not on the scale that some think that needs to be done. Most recently, they introduced a rescue package. This was providing up to $42 billion in funding to Chinese banks to spur lending. But the Wall Street Journal reports banks have only fulfilled about 4% of that quota, so not a lot of take up on that front. The PBOC cut its key interest rates last month to push spending on services, but that has done little to improve consumer confidence. And the reality is here that Chinese officials simply don't have the appetite to go for this bazooka-style stimulus, especially given the country's debt picture, something we've talked about for some time. The debt-to-GDP ratio for the Chinese economy right now, well over 250%. And Chinese officials in recent meetings have sort of signaled that the new focus on consumer spending, particularly because that makes up about 50% of the Chinese economy. So look out for some additional stimulus potentially on that front. But don't expect the kind of stimulus that we have seen in the past. Chinese officials simply not going there, at least just yet.
All right, Akiko, thanks so much for breaking that down for us. Certainly something that we will continue to watch.